one thing is that maybe you don't really believe in yourself or believe in your skills yet.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So I have a question from a trader here. The question is, what do I do if I know what my trading system is, but when I go to trade, I trade different strategies that I haven't tested? So I'm trading my strategy that I've tested, but I'm also trading signals from other traders and trading systems that I see on the YouTubes and all these sorts of things. What do I do to stop myself from doing that? So that's the question. It's kind of like, I think it's, well, So what are your thoughts on that?
Yeah, that's a tough one, right? And I think we've all done that at some point. I've done that in the past for sure.
Yeah.
But I think it comes down to maybe a combination of things. It depends on the person, obviously, but I think one thing is that maybe you don't really believe in yourself or believe in your skills yet, and you need some confirmation that you're using somebody else's system, or you don't have something that actually works yet. So I think that could be one thing. Another thing is there might be like this get rich quick mentality that some people, even if this isn't get rich quick, like sometimes you kind of want to be rich right now. So you have a tendency to hop on these other things that look good. And maybe that your system makes like 10% a year or something, and you want more than that. And that might be another reason why we do it. Personally, for me, it was probably more the latter. I wanted to get more trades, and I didn't want to wait there and have to wait for the slow strategy. So that was me. But I don't know. What do you think?
Yeah, I guess it could be impulse control, right? Where you just want to you just want action, right?
Yeah,
it could be that, but
true.
Also it could be, I think, what you're saying, which is like in your head you have these goals and these ideas of where you want to be, and you're not getting there with your one strategy. So you're like, okay, well, this guy looks like a good trader, I'll just take his signals too. You know what I mean? You're kind of trying to compound faster or something like that. Like it's like pressure. So like, for example, this trader, he's trying to qualify for funding, right? To trade a funded account. And so, he's gone away from his strategies and he's started trading basically signals that he found. And so it's like, if I was the company and I knew what was going on, I would just cut out the middleman. Like, why do I need this guy entering the trades, right? If I was going to fund somebody and he's trading the signals, you know what I mean? Like it's just crazy. So anyway, I found that fascinating. That to me, it could be just impulse control, and that's a big problem for a trader. You may not be cut out for trading. You may be able to make it work, but you may also not be cut out for trading if that's your major thing. You're really going to have to get a handle on that, because that's a big problem for some traders. And sometimes it's why they're drawn to trading, sort of like gambling sort of mentality. But if on the other hand, it's more that you wanted to just accelerate your account growth, you could argue that the right approach is just to keep doing what you're doing with your tested strategy, and then start looking for other strategies and put them through the whole gauntlet, get them up, that sort of thing, so that you have to wait, but at least you can see a light at the end of the tunnel, where now I'm taking, triple the amount of trades because I've got 2 more strategies that I've tested and are ready to go. So that sort of thing. I will say though, that for me, sometimes it's like having a lot of strategies is not the best, because if you have so many strategies, you kind of have to it's almost like, for me, you look at the weather. What's the weather going to be today? And then I decide what I'm going to wear based on what the weather is projected to be. And that's the same thing with your trading, right? So the markets are doing this, or they're trending really hard like this with very little pullback. So I need to pull out this strategy and use this strategy. So I think that's kind of my approach, has been to look at it sort of like, okay, and I don't recommend this, actually. I don't think that this is I don't think this is the best way to do it, especially if you're starting out trading. I think you should really just latch on to 1, 2, or 3 strategies where you've tested them and you really have confidence and all that, and just trade them, just keep trading them. But my approach has been, okay, I have this type of market. So I'm going to pull out this sort of like this jacket. Like the weather's going to be like this cold today, so I'm going to pull out this jumper or this jacket or this shirt or whatever. And that's kind of, I think, how I approach it. But again, I think that is a possible approach, but it's probably not the best approach, especially if you're new to consistently trading a strategy that you've tested and you have I think that. And so I kind of probably shouldn't have brought it up, but that's what I do. You know what I mean? Because it's just like I just can't trade all strategies all the time. I really need to like just focus on, okay, this is the kind of thing. And sometimes it's 2 or 3. Like if you have a trending market, you might have 2 or 3 really go to trend strategies that you love to trade. And it's kind of like looking at the market and go, okay, yeah, it would fit this template. So I'm gonna, I'm gonna overlay that template on the chart. I'm gonna look for a setup like this, or whatever. So, and it's really weird to me how after you have looked at a lot of charts over many years, it almost becomes, I don't want to say easy is the wrong word, but it almost becomes obvious what you should be looking for. It doesn't mean that you get it always right. It just becomes super obvious after a long time looking at charts. It becomes super obvious what you should be looking for, if that makes sense. So like sometimes I'll see people show me a chart and say, oh, look at this kangaroo tail, I'm going to take a trade here. And I'll be like, wait, where is it? Because I can't even see it. You know what I mean? Because it's like in this box of consolidation and there's no space, or you know what I mean, or whatever. Like, what are you talking about? Oh, there's no. Oh, I see. Like, do you know what I mean? It's kind of like that after a while. If you get, and that's the advantage of having a strategy that you've used for a long time. You don't get that if you keep hopping strategies. You never get to that. Do you know what I mean? You never get to that point where you're so well versed in a strategy that it'll just pop right when you see the chart. It's like, okay, there it is. This is what I want to do. But but when I was hopping through strategies over and over again every 2 or 3 months or whatever, I never had enough time to get to that point where the obvious trades would show themselves. I just had to like, okay, now where's the stochastic, and pull the thing down, and you know what I mean, and have a really close look. So so that's long-winded, but that's kind of my thinking on that.
Yeah, I think that's what it comes down to, right? The mastery part of it. Like the signals and the setups and the indicators give you, they put you in the ballpark, but once you're there, then it's up to you to kind of like fine-tune that for yourself and figure out what works for you, and look for those like secondary indicators, right, that will give you the confidence, I guess.
Yeah, absolutely. That like when you say secondary, I think like the context of all the candles. So if you're using like a naked strategy with just candlesticks on the chart and nothing else, then the context of all those candles before your signal candle tells you a lot. So I've been thinking about this a lot this week. So this idea that, so you have a hypothesis. I think the market's doing this. Now, some people don't do that. Some people try to get away from that, and I commend those people, because if they just trade what they see, have to tell you, I try and do that, but I have to say I do have thoughts about, okay, I think this is what's going on. So what I do is I'll test that, and I go, okay, if this is what's going on, then this is what should happen. Now, it doesn't mean I'm in a trade right now. It just means I'm testing my theory. So, for example, right now as we record this, Bitcoin made a move up, a really strong move up from support. Support was around 20,000 or 19,000, something like that. And it's made this really hard bounce, which is the third time it's done it in the last, 2 months or whatever. And so, and it went really like big daily candle, like, woo, it really went. And I said, okay, well, my theory is that this is just a pullback and it's going to end up, coming back down to test that level. But if I'm wrong, this is what it would look like. And so I had 2 or 3, really 3 different scenarios where the market would be doing something totally different, which is just taking off in a really strong uptrend, which I didn't believe would be the case. But I had to like hypothesize, okay, do you know what I mean? I have to I try and fight this false duality. False duality is the idea that it's either going to be this or that. Well, no, that's not true. Like in most things in life, it can be this, or this, right? And so that's what I do when I look at the charts. I go, okay, I think we're going to come right back down to where we just bounced. But this is a really strong bounce. So maybe I'm wrong. Maybe it could do this, and that would mean I'm wrong, or this, that would mean I'm wrong, or this, that would mean I'm wrong. If I'm right, we could see this or this or this, right?
Mhm.
And so as the candles unfold, it gives me one more data point every day, a daily candle, as to whether I'm wrong, right or wrong. And so it kind of is a way, it's hypothesis testing. Science is supposed to work the same way, where you have a theory, so you will set up an experiment, and then you hope that things fall the way that supports your theory.
Mhm.
If it doesn't, then you can do another experiment. And if it doesn't, you can do another experiment. And at some point, you decide, okay, this is no good, right? I need to scrap it and come up with a better theory. And then other people do the same thing. They'll say, oh, look what he did. He thinks it happened because of his theory. But no, I have a different theory. So I'm going to show with my experiment that's really close to his, but just a little bit different, that actually what happened was incorrect. He was
Mhm.
wrong in his thinking, and I'll get similar results with mine. So anyway, I just think it's really interesting how, that can map onto trading too. This idea of, getting more data and hypothesizing,
Yeah,
what should
that's
I
what
do here?
like a lot of the bigger traders did, right? Like Jesse Livermore and stuff. They put in like a little tester, like position. Okay, did that work? Okay, yeah, let's put in another one, and then kind of pyramid up from there.
Yeah.
And yeah, otherwise you're kind of
Yeah.
either sitting on the sidelines and you don't have any skin in the game, or you're all in and you're either right or wrong. So that's a good
Yeah.
point.
Yeah. And what you just said, you can do in reverse. So like you're saying, like Jesse Livermore says, okay, I'm going to buy now because it's going to go up. He was famous for selling and making money in the bear markets, but he was, he was flexible. So he buys now, it goes up. So he buys more and like that. Right.
Mhm.
Well, the same thing happens if you're like a long-term investor and you're a pro, you will do the same thing, right? You go, look, I think it's going to go down to this level. So I'll buy, a fifth, I'll buy a fifth, I'll put a fifth of my position on then. And then I think it could go down to this level. So it gets down there, I'll buy another fifth. And then it could also even go further down here. I'll buy another fifth, so you have all these levels where the market could bottom out and then start going up. And
Mhm.
so you just want to, you don't want to be all in so that you don't have any bullets left if you're wrong at the reversal point. It's the same
Mhm.
thing that you said, but in reverse. So these are the guys that are buying, trying to catch a falling knife, and they don't know where it's going to bounce, but they know it could be one of these 5 levels, and they just have a little bit at each one. And of course, you're never going to often it will never get to your 5th position, right? Or even
Mhm.
your 4th position. So you only have 3/5 in, but that's okay because you at least saved yourself from holding, being underwater because you put 5/5 of your position at the first level, right?
Mhm. Yeah.
So this is, so it's a really interesting thing. And it changes everything too once you're in a position, doesn't it? Like your
Mhm.
thinking and everything totally is colored because you have skin in the game. So it changes everything. So yeah, it's a really clever way to do it. And I think on both ways, whether you're like a long-term investor trying to scale in, and waiting for different support levels, assuming, it's going to go up for a long, long time after that, or whether you're like a short-term swing trader and you're just buying or you're trend trading and you're getting in. So you keep adding as you're right.
Mhm.
You know what I mean? In both ways, you're adding as you're right, but it's kind of like, you're being right by seeing the market go down,
Yeah.
and you think it's going to go down to this level, whereas with the trend follower or the swing traders, like they're right because the market's giving them feedback that your position's in profit, so you keep going. So
Mhm.
it's really, really interesting when you think about it.
Cool. All right. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.